Going. The simulator show. Good morning, guys. Welcome to the room. It's great to have you here today. Today is Tuesday, August 26th. All of our medium impact news is behind us for the moment, and we have a little bit more cheeseburger consumer confidence at 10 a.m. Good morning, Derek and Steve and Ron. Guys, no high impact news today. We're going to go through, we're going to look at our patterns, we're going to see what we can pull off. And there it goes. Everything that we talk about today in this room, guys, is going to be the core, the basic, the foundation, the how do I do this the easiest way possible? That's what I'm looking for this morning. And I built this little reminder. I was looking at it. Guys, in a market that trades billions hourly, futures markets trades billions hourly. The S&P market trades about $174 million a day exchanged. You need to find $400 a day consistently. That's it. $400 a day consistently puts you in a six-figure income, which means that there is going to be a tremendous amount of doing nothing, waiting for an edge, getting into the market when the advantages are present, sitting on your hands, doing nothing when they're not. So what I'm going to do this morning, what I do every morning, is we're going to talk about a couple advantages. We're going to talk about two different platforms, and we're going to talk about rules on two different platforms. So most of you are familiar with, hey, good morning, Ed. It's already a great day. Most of you are familiar with NinjaTrader. A lot of you are using it. I think I'm about to crash it, which is a great segue. NinjaTrader uses dynamic Renko bars, ladies and gentlemen. And there it goes, off to the races. The second platform that we talk about is going to be TradingView. And TradingView uses minute bars. One is not better than the other. It's just different. It's different platforms. There you go, Pete. And you only have to catch a little bit of that, right? So I'm bringing my NinjaTrader back up. NinjaTrader uses Renko bars, guys. Renko bars move faster. Renko bars have more fluctuations. Renko bars are going to have a different set of rules. TradingView uses minute bars, and these minute bars, is that a close on the correct side of the triggers? Oh my goodness. These minute bars are slower, guys. 15 minutes to build one bar here. 15 minutes for one bar, an entire minute for this bar. So the rules are going to be a little different. If you are on Renko bar charts, learn your Renko bar rules. It is initially 3 rules on only 2 charts to get you into the highest probability trend trades you can ever take. So for my NinjaTrader users, I'm going to give you what's called the KISS plan. There it is right there. The KISS plan revolves around taking the perfect entry. The perfect entry that is derived from only 3 advantages, and those 3 advantages come together from the only 3 rules that it takes to catch this trade. That's not a lot of moving parts. So each rule, when true, provides this advantage. So strong triggers will give you the advantage of momentum, and momentum is difficult to stop, guys. Momentum is this force that pushes the market in the direction of the trend. Then you're going to make sure that there are no termination conditions, nothing in the way to stop the market. That's going to give you the advantage of a clear path. And once you're working with momentum and a clear path, 90% of you in this room are going to find a different way outside of this high probability trend trade to capitalize on those advantages. Your first entry is what we call a trend trade entry. And that trend trade entry is one rule giving you the advantage of a market being able to pinpoint exactly where a market is likely to bounce and continue with the direction of an already established trend that already has momentum in the favor of that trend that has absolutely nothing in the way to create a bounce. These 3 rules, NinjaTrader users come to be on only 2 charts. There is a big chart and there is a small chart. The big chart is a very slow-moving chart. It is a broad stroke of a brush. It's a general opinion of the market. It's going to define direction. It's going to define momentum. It's going to define areas. And your first 2 rules, your first two advantages are met on a large chart. When they are met, when you have momentum, when there's nothing in the way, you'll go to a smaller chart, a faster chart. This is going to refine that big broad stroke of a brush. This is where you will pinpoint your best to the best entry. This is going to allow you to reduce risk. This is going to make it so that you can increase your profit potential. There's my picture. There it is. Two charts, whether it is TradingView or whether it is NinjaTrader. Your large chart on both platforms, I want you to think of it as the large crowd. I want you to think of it as the men and women that control the market, that create trends, the men and women that establish the momentum that you're looking for, the men and women that react to the areas that could stop forward progress. Trading with a large crowd is the easiest, the path of least resistance. Your small chart is like a small crowd. It's the little fights within the big picture. And these fights typically fail 70 to 80% of the time. We're going to use rule number 3 on NinjaTrader to define exactly where their fight is most likely to fail, to define exactly where the market is most likely to bounce, and continue in the direction of the trade. So we are going to break down these 3 rules on NinjaTrader, and then we're going to go over to TradingView. We're going to talk about indicators on both real quick, though. Both platforms use trigger lines. There are 2 sets of triggers, guys. There are small triggers and there are large triggers. These are fast triggers. These are slow triggers. You don't have to know anything else about them. Know their names. Small triggers and large triggers. If you are on TradingView, the plan that I'm going to give you for TradingView eliminates the large triggers from the large chart and focuses only on the small and the immediate momentum. But know that these are small. Know these are large. You're going to use them to define momentum. On your Renko bar charts, you're going to use them to define termination conditions, to define entries. And then you're also going to see on both platforms, and I figured out how to do this morning. This is kind of cool. You're going to see areas. So areas are horizontal lines on your large chart. Areas are where the large crowd is most likely to make decisions, guys. Areas can create bounces. Areas can stop trends. Areas can mess up forward progress. And they all have names. There are divergence highs and lows. These are magenta or cyan lines. They print off of a pivot. And you'll see a negative number print as well. I want you to tune out the negative number. It's irrelevant. It's a byproduct of the calculation. Anytime you see this cyan line or this magenta line, I just want you to say to yourself, there was a loss of momentum. I'm losing momentum right at that spot. You're going to see divergence high, or I'm sorry, resistance. Resistance is a red line that runs the length of your chart, guys, and it can stop a market's forward progress. This is where in an uptrend, sellers may take over, where untradeable bounces may occur. Sometimes they break as well. We're going to use trigger lines to define that on a big chart. You're going to see Fibonacci support in a downtrend. This is an area that could stop the market, create a bounce, reverse it completely. You'll know about these areas long before the market ever gets to them. You'll also see yellow 1-to-1s on your chart. Yellow 1-to-1s are fibs in the moment, guys. And in an uptrend, they can be resistance. In a downtrend, they can be support. And then you're going to see a mid-band. When the mid-band is magenta, it means price is trading below it. It may behave as resistance. When it is green, excuse me, price is trading above it, that mid-band may be support. Now, regardless of which platform you are on, you are going to have 95% of the same indicators. The only difference is on TradingView, instead of Fibonacci, most of you, I'm hoping all of you, will get those chart prime indicators, supply and demand zones, and guys, they're going to behave in the same fashion that Fibonacci will. When price is trading down, these are areas that can stop the market. When price is trading up, these become areas that can stop the market. Now, both platforms are going to have very specific rules for entry. Both platforms are going to have different reads. So I'm going to talk NinjaTrader first, and we're going to talk about strong triggers, we're going to talk about clear path, and we're going to talk about defining an entry, guys. And everything begins on the large chart. So for both platforms, we're going to learn the rules. This is your path to getting to where you want to be ASAP, ladies and gentlemen. Post in the room. Every time you take a trade, post in the room. Talk about momentum. Talk about terminations. Talk about the entry area when you're trading NinjaTrader. Talk about the direction of the triggers. Talk about where price is. Talk about whether or not you had room to targets if you're on TradingView. We're going to break them both down. But the more you post in my room, it's the more you're going to get out of me. You're going to get a private session, guys. We're going to talk about the good. We're going to talk about mistakes that you may have made. We're going to talk about if you're reading your indicators correctly. And if there's anything I can do to help you find a couple extra dollars in there, risk a little bit less, you're going to get that feedback as well. So don't hesitate to post. The second thing is use a spreadsheet that I'm going to give you guys. I'm going to give you the NinjaTrader spreadsheet first. And guys, this is where you're going to learn the patterns that are giving you the edge. This is where you're going to learn the looks that are going to be there for entry. And your spreadsheet, NinjaTrader users, has the very basic rules broken down in the green section individually. I learned this cool thing yesterday. So I'm watching Netflix, and Chris Hemsworth, Thor, it has a new series on learning, and that's all it is. It's training the old brain, which was pretty cool. And it talks about a method called chunking, and I don't know if anybody's ever heard of that, but what it is instead of looking for the trade, instead of learning the trade initially, learn the pieces that create the trade, learn the chunks that create the trade. So learn to recognize strong triggers first, guys, and once you can recognize strong triggers, compound it with the ability to recognize a clear path, and then finally an entry, but learn them individually and piece them together to find success. There are over 500 pictures of Nexgen users doing just that, using momentum, using a clear path, defining an entry, and finding success. When you guys are brilliant in my room, very often I steal your trades and put them into a study guide for new users. There's ideas on the NASDAQ, ideas on management, patterns that repeat themselves, even a place for you to put all your pictures. When you take a trade, you're going to do two things. You're going to put it into your spreadsheet. The last page is your trade tracking. This is what I did. This is what I saw. This is what Mark said. Mark said, I'm trading in determination conditions, but he also taught me how to avoid making that mistake. Or Mark said, this was perfect. Every rule is met. What a great trade. Drop that one into your trading plan because that's the pattern that you need to memorize because that's the pattern that produces an edge. Both spreadsheets that I gave you guys today will have that trade tracking. If you go through this very simple process, practice, 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 right? Take a million pictures. Tell me what you saw. Keep it simple, keep it focused, but learn those looks, guys. You'll get to where you want to be sooner than later. Are there any questions before we get going? We are going to talk about NinjaTrader first, guys. We're going to talk about dynamic Renko bars. We're going to talk about 3 rules on only 2 charts. So I'm going to open up my S&P while we get into the rules. The first rule says that the large chart, the big chart, the slow chart, the one that defines direction, momentum, and areas, must have strong trigger lines, guys. Strong trigger lines are the first advantage for a reason. I want you to think of this as a flow chart. Strong trigger lines are the easiest lesson you're ever going to get in my room. Whoops, where are my strong trigger lines? Did I lose them? There they are. Because strong trigger lines have nothing to do with anything other than small and large triggers. So on your NinjaTrader charts, when the background is green, the trend is up. And when the background is red, the trend is down. And the easiest thing you will ever do is trade with that large chart trend. Fighting the trend is like a surefire way to drain an account for most people. The only way you can have strong triggers in an uptrend is when your smalls and large are both green as well. Or in a downtrend, your smalls and large are green or red as well. To have strong triggers means that there is a separation between those 2 trigger lines, that your small triggers are up above the large triggers. There is space, there's a gap between the 2. That's your strong look, and that strong look means that the odds are favorable for the market to continue up. Smalls below the large, space between the 2, that's your strong trigger. The odds are favorable for the market to continue down. Odds favorable momentum, you're going to see it on charts all day long. OFM, you're going to hear people annotating. Guys, so when you have strong triggers, you have a market that's likely to push in the direction of the trend. You have the look that you need to help break key Fibonacci areas. You even have the look that you need to help cover some of the mistakes that you may make as a new user. Strong leads the way. Strong is rule number one. It's okay to insist on it. And when the gap closes, when the small triggers work their way back inside of the large triggers, these are weak triggers, the opposite of strong, the absence of advantage. And when I have weak triggers, anything can happen up or down. Strong triggers has nothing to do with Fibonacci. Strong triggers is a separation between the triggers. You TradingView users will use this look on a small chart to capture momentum trades. Renko bar users, you can use it on both charts. Is everybody good with that? That's typically one of the easiest lessons. Separation is strength, and separation is strength. And when the separation goes away, so does the strength, and sure enough, that's where the market retraced over here on my large chart. Once I have that strong triggers, I've got to make sure that I'm not trading into something that could stop the market. Ladies and gentlemen, your large crowd makes decisions right at key Fibonacci areas. The big crowd enters, exits, fights right at key Fibonacci areas. So we know about them before the market ever reaches them, and there's a pretty easy recipe to define a termination condition, to know when it's okay to not take that next trade. And it all begins with price reaching the area. Your dynamic Renko bars will push up and hit those yellow 1-to-1s. Your dynamic Renko bars will push up and reach that area of resistance. Once it reaches the area, we're done with price. No more price. Don't care about price. It's all about trigger lines. The trigger lines will tell you everything that you need to know about that area. And if none of your trigger lines have gotten above resistance, I want you to assume that that area is going to hold. I want you to assume that it's going to create an untradeable bounce. I want you to feel like you're going to lose money trading into that area as a brand new user. This is a little bit of a safety net to keep you from trading into areas that could stop the market. It did it right there to the tick. Triggers below, and that's where the huge retracement came from. Areas do break. If they didn't, we'd be caught in ranges all day long. When two of your trigger lines get above that area, you can say to yourself, this area with all of that momentum has the potential to break, but guys, it's not a good look. It's not your best look. And the potential breakout is less likely. You will be grasping onto perfection on your entry chart and in regards to momentum to try this trade. But it gets easier when one more of the trigger lines get above the area. When three trigger lines get above the area, now that breakout has a higher chance. Now that breakout is a little more imminent. You're still going to latch on to momentum because it takes momentum to break a trade. And you're still going to latch on to a great entry because your path still isn't clear. But you will be able to trade that potential. And that potential trade is in the plan that I give you each and every morning. But once four trigger lines get through an area, that area is considered broken, guys. Areas of resistance behave as support. Areas of support behave as resistance. So as the brand new user, your option is to wait for that clear path. But because this high probability trend trade is teaching you to recognize what it takes to have a clear path, it's going to open the door for the next trade. It's going to open the door for the potential to break. So from the very basic comes that next level. And we'll go back to a large chart once again. And when price reaches resistance and all the triggers remain below, it's okay to not trade into that resistance. And when price reaches resistance and all the triggers remain below, it's okay to not take that trade into resistance. And when it retraces all the way to support and every trigger line remains above, the expectation is that that area is more likely to hold than break, and sure enough, the market ricochets. The begin down came right from resistance with absolutely no triggers through. The push up came directly from support with absolutely no triggers through. Can you guys give me a Y in the room if you're with me? Momentum leads the way. And guys, when you have momentum, let's make sure that the path is clear. And if the path is clear, this is where the magic happens, guys. We're going to go to that smaller, faster chart we're going to use that small chart, that small crowd fight, and your accuracy is so awesome here because you're going to use a limit order. You're going to wait for the market to come to you, and you're going to use a limit order to buy or sell a pullback. And a pullback is that small fight from the small crowd, that little push down when everything says up. And you're going to use that limit order to buy or sell that pullback at an area. Areas, the same way they can stop a trend on the large chart, can create a bounce on the small chart to send you in the direction of the trend. But there's one more part of that phrase that pays dividends. There's one more thing about the entry rules that's going to set you up for success and reduce risk. And that is making sure that your areas are inside of trigger lines. Trigger lines are moving averages. Price returns to moving averages. Whether that moving average is on a large chart, price tends to break away and pull back right to it, or whether that moving average is on a small chart, price tends to break away and pull right back to it. So you have the utmost accuracy when your large triggers from the large and small chart are overlapping on your small chart. You have the smooth triggers. These are the native. These are the 5-1 triggers from the small, faster chart. You can compare those to the small triggers, small and large, odds favorable momentum even on a small chart. And then you also have the synthetic triggers. These are just the large triggers from the large chart. Your trigger lines will define where the pullback is most likely to go. The trigger lines will define the retracement zone. The areas within those trigger lines are what define your entry, or what define the point most likely to create a bounce. So as we look for entries, we are going to buy or sell a pullback at an area inside of triggers. So for a short trade, the pullback begins with a reversal bar. Your large chart should be going down. Your large chart should have strong triggers, and your large chart should have absolutely nothing in the way to create a bounce. This reversal bar signals the beginning of the small crowd fight. You can define where that fight is most likely to go using trigger lines, large and synthetic. From the lowest point of the triggers to the highest point of the triggers, this is where the market is most likely to retrace. This is where the pullback is most likely to go. But it's the areas within, fibs, mid-bands, and yellow 1-to-1s that are most likely to produce a bounce. Your job will be to activate a limit order just a little bit below, a tick or two below that lowest point of resistance, closest to the reversal bar. This becomes your entry for the highest probability trend trade short, because you have waited for the fight, you have defined the retracement zone, and you have pinpointed exactly where the market is most likely to bounce and continue with large chart advantages. Now here's a cool thing. Anything, any line, any fib, any yellow 1-to-1, even a mid-band, beyond those trigger lines, above those trigger lines, this is where the market should not go. This is where the advantage of rule number 3 is no longer in play. This is not a part of the entry equation. This is very much the wrong side of the triggers, as I like to call it. In a long trade, reversal bar still begins the pullback, guys. Large chart's up. Large chart has a clear path. Make sure you learn those 2 rules first. Reversal bar says, hey, small fight. Here it comes. Here comes the pullback. You can define right where the pullback is most likely to occur. Top of the trigger lines to the bottom of the trigger lines. Guys, this is just a pattern. You can define where it's most likely to bounce at a fib, at a mid-band, at a yellow 1-to-1, inside of triggers. Embrace that phrase, inside of triggers. But because of the large chart momentum and clear path, you're going to activate a limit order just above the highest point of support, closest to your reversal bar. This becomes your entry for the highest probability trend trade. Because you're learning that trigger lines define the retracement, that areas could produce a bounce, you understand fully that it might be these yellow 1-to-1s that produce the bounce. But we're not going to hope that it gets down there because of those large chart advantages. Highest point of support. You're also going to understand that this Fibonacci area on the wrong side of triggers is not expected to create a bounce, because once you get to the wrong side of the triggers, you don't know if, when, or where that market may continue up. And because you can define where the market is most likely to retrace, because you can define where the market is most likely to continue, you know exactly where your stop goes for this high probability trend trade. And the initial stops are to be placed where the market should not go, 4 to 5 ticks beyond those trigger lines, guys. And I'm going to let you in on a secret. Don't tell the other kids. In the perfect trade, when you have odds favorable momentum down, in the ideal scenario, when there's absolutely nothing in the way, in the most perfect entry, when you sell a pullback to an area inside of triggers, any pattern that typically wins 70 to 80% of the time is obligated through math to lose 20 to 30% of the time. You are reducing your risk by waiting for the pullback. You are reducing your risk by putting your stop 4 to 5 ticks beyond those triggers, and you are accepting your risk because with a little bit of study, the one thing that you will realize is that this is a pattern that typically wins more than it loses. This is an edge. This is an advantage. So when the large chart is up, when the large chart has strong triggers, when the large chart has room to targets, ladies and gentlemen, your job is to wait for the smaller, faster chart to go down. That's hard to do as a brand new user, and that's why study creates confidence and trust. This tail on a large chart comes from this pullback on a small chart. We don't trade the tail. We trade the pullback to the area inside of triggers. Because you wait for the pullback, you'll have the least amount of risk possible. Because you wait for the pullback, ladies and gentlemen, you will have the absolute furthest room to get to your target. Less risk, more profits, and it's just one pattern. Does that make sense, everybody? You can study the pattern by going back and circling these tails on the large chart. Let's see if we have an example of it. When I have momentum, this is a pretty good example. When I have the potential to break, if I circle the top of that tail, or square the top of that tail, you'll notice that there is a reversal bar. There is a pullback that goes right to the very top of the retracement zone. And it actually doesn't bounce right off the areas. But if you entered at the area inside of the triggers, your stop kept you safe, and the market did continue down with enough room to produce profits. Does that make sense, everybody? So we scroll back, and we can look for triggers. We can look for the advantage of momentum. We can look for the best of the best. And there it is. And guys, 90% of your day is being patient. 90% of your day is waiting. But if I go back and circle those tails with the advantage of momentum, if I go back and circle those tails with the clear path, where are my circles? There they are. Right back to resistance, right inside of triggers. Good morning, Cav. And it continues down. And Spice, winners do seem to move in your direction rather quickly, don't they? Because somebody is waiting right here to kill the small crowd fight. Somebody is waiting right there to start the push down. And guys, we just have the keys to the kingdom. We know their pattern. And with a little bit of study, you'll learn it, you'll learn to trust it, and you'll never miss this entry. And guys, that entry at 64.40 didn't even blink until 32.50, like 12 points later. Pretty outstanding, right? In a market that moves millions every day, you need to find $400. So when we watch the live market today, we are going to talk about momentum. We are going to count triggers, odds favorable momentum, only 2 triggers through. And if the rules are met and we get a pullback to areas inside of triggers, we'll pull the trigger. and we'll see what happens. But with only 2 triggers through, guys, it doesn't fit the plan that I give you. With no momentum, there's no reason to look for a clear path. But if you did, you don't have one either direction. Crude oil's dancing. Crude oil's trying to make something happen. They just can't seem to. So NinjaTrader users, you have your spreadsheet and you have your plan. 2 charts, 3 rules, and a checklist for entry. Your plan also includes how to manage as a brand new user as you learn to read your indicators. It also includes 3 out of 4 triggers through. Take that potential to break trade. The rules are very, very specific, guys. Even the management is in there. So during the day when we watch the live market, if the rules are met, I will pull the trigger and we will manage it according to that plan. That plan is your stepping stone in your learning journey, guys. That plan is the beginning, the foundation, the way for you to learn to read your indicators so that you can find the next trades. Are there any questions about the high probability trend trade? Are there any questions about momentum? About the need to count triggers when you reach areas? Any questions about pullbacks to areas inside of triggers? That is your core. That is your foundation. And Ringo users, that is specific to NinjaTrader. Now we're going to go to TradingView. And TradingView has a different plan because it's a different platform. It uses different bar structure. TradingView is once again a stepping stone in your learning journey. This plan is designed to optimize your chances of success, to give you the highest probability of success as a brand new user. It's only 2 time frames. There's a 15-minute chart. That's your big slow chart. And there's a 1-minute chart. That's your fast chart. That's your entry chart. So because they are minute bars, guys, it's a little different read, but it's a consistent read. When you look at your large chart and you look at those 15-minute triggers, guys, and you're looking at it, and I've broken the read into 3 parts. The first thing you're going to do as a brand new user is you're going to say, what direction are those small triggers going on my large chart? And if they are going down, your path of least resistance is to look for short trades. And if they're going up, your path of least resistance is to look for a long trade, trading with the immediate trigger momentum. Everybody good with that? Pretty simple, right? Unless you don't know up from down, this is going to keep you on the right side of things initially. And then you're going to ask yourself, where is the current price, the most current price? Where is that highlighted price trading in relationship to the triggers? And the answer to this question is going to help you know how you need to approach it for management. There are 3 options. The first option is that price is left of the small triggers. That's the strong side. That's where 1-minute areas have the best chance of breaking. Not guaranteed, but that's kind of your odds favorable momentum look. There's a transition, number 2, when you find yourself inside of the small triggers. And when you're in transition, you need to be ready to manage. And when you get to areas on your 1-minute chart, you need to be ready to manage. There's no reason to lose directly into an area. And then there's what we call the weak side. If you were on the right side of the triggers, not the left. The weak side of the triggers, I'm still looking for long trades, but I'm going to manage more assertively. 1-minute areas are more likely to hold. Weak side of triggers is where you are right before the reversal. Weak side of the triggers is where you are right before the reversal, guys. So understanding where you are in relationship to those triggers, where the most current price is trading, gives you the heads up on how you may need to manage that trade. And then the final question, we've defined momentum, we've defined direction. Do I have room to targets? Do I have room to get to trouble on my large chart? And if you have room, it's time to go look for an entry. Is everybody with me so far? So a large chart read. The small triggers are up. We are on the solid side, the strong side of large triggers. And there's tons of room to get to anything bouncy. We don't have any entry rules, man. But at least our large chart says, I'm only looking up. Well, now I'm on the weak side of triggers, and now I don't have any room to get to a mid-band. I'll be darned. And look what the market's doing. It's pushing down. So when your rules are met, there are two types of entries that you're going to take, guys. Entries are taken at mid-bands and areas for trend trades, pullbacks to areas, not using a limit order, using a close on the correct side, and then there's also what we call a momentum trade. And a momentum trade relies on those strong triggers, guys, and you're going to see these every now and then. And price has to break away from that area and then pull back to it. And as long as you have strong triggers, when the large chart is up, when the large chart is strong side, when there's nothing in the way, you can use a limit order to buy this area to enter that market. You can put your stop just below it. This is a momentum style trade. Momentum fails, guys, and when momentum fails, the small triggers turn against you. This is your second entry. This is a trend trade style entry. And if the small triggers turn against you, let's do this, you can see it. If the small triggers turn against you, if they pinch, if they roll, if they open up, your job is to wait for a pullback, to wait for the market to go down or up to that next area, that further area. And when you get to an area, when you get to a mid-band, your job is to wait for a close on the correct side of the triggers, to take a close above the triggers for a long trade, to take a close below the triggers for a short trade, because this 1 minute chart is still a pretty big chart, and these small triggers on the 1 minute chart define the immediate strength in the move. You don't want to fight that strength, guys. You're more likely to lose it than you are to win it. But when you get to an area and it closes on the correct side, that's your trend trade entry. And Victor, I think this is where you're missing a little bit. Is that trend trade style entry, waiting for an area, waiting for a close, because you're used to Rinko and going at areas. I was looking at your charts, but we'll look at them again and talk. So guys, there's only two entry styles. You're either going to have strong triggers and use a limit order to buy or sell a pullback to the area right there, and it's just momentum. You're going to be aware of the areas in front of you, or that momentum's going to go away and it's going to turn into a trend trade style entry. Does that make sense, everybody? So there is trend trade checklist, the same way we did it on the other plan. 15 minute is not trading into anything. 15 minute has room to targets. 1 minute is not trading directly into anything. Clear path, room to targets, guys. And then you will buy or sell a close on the correct side of triggers at the 1 minute mid band or possibly an area. So if we pull up that picture right from the plan that I gave you, the market moves up, only looking for short trades because that's what my large chart is telling me. It pulls back to the mid band and I get a down bar that closes below those triggers, and that's what sets off the move down. That's your trend trade entry. Takes a little bit of patience. The other entry is the momentum trade, and look at this. No terminations on the big chart. Guys, we are always advocating for room to targets. 15 strong side of the triggers. Because if this is going to be a momentum trade, we want momentum. 1 minute, strong triggers, separation between the small and large. And then it's any pullback to an HVA or an area for the entry. So a momentum long entry looks just like this. Strong side of up triggers and nothing in the way. And because of that strength, when the market breaks and pulls back to these one-to-ones with that strong trigger look, you're going to buy directly at that area. You're going to wait with a limit order right at that area. This is the only time you'll use a limit order. If you're waiting for a pullback and a close above, you're just going to mash that buy now, that sell now button. And guys, this is your trading view plan. And the trading view plan starts on the large chart. And the trading view plan forces you, if you're going to follow it, to trade with the direction of the small triggers, to know where you are in relation to those triggers so that you can manage appropriately, and to make sure that you have room to targets. The checklists are there, guys, and I'm telling you, it's difficult to get into trouble if you're following a plan. Small triggers were up. You got to the weak side, and look at this. It pulls right back to a mid-band, to a zone, to an HVA, to a zone, and it's the close on the correct side of the triggers that starts the market moving up. Does that make sense, everybody? That's your look. That's your trend trade look. And let me show you one other thing. With all that momentum, if you took a pullback to the zone, guess what? It pushed up because there was no room, and your failed momentum trade turned into a trend trade. When momentum trades fail, guys, and the conditions are correct, they very often turn into trend trades. So knowing that keeps you from keeping all your eggs in one basket, hoping that momentum trade goes up when everything turns against you, being willing to be stopped out where the market shouldn't go, looking for the re-entry. So that is both plans. Both plans use two charts. Both plans use trigger lines. Both plans use areas. It's just a different approach to capturing. So if you are a Ninja Trader user, we're going to look for momentum. Smalls are inside of the large. I don't have it. Price reached a divergence high. All my triggers are below. I don't have a clear path. I choose not to look at my smaller, faster chart and trying to find an entry with no advantages. Crude oil. The triggers are different colors. I don't have the advantage of momentum. Price reached support and all the triggers are above it. I can't go short. Price reached resistance. All the triggers are below it. I can't go long. My rules say, Mark, don't do a darn thing until they break out of this range that is established by rule number 2 Fibonacci. Does that make sense, everybody? That's your large chart read, and because I didn't have my first two advantages, I choose not to look at my small chart. Because trading is probabilities, guys. Trading is having an edge. Trading is patterns that you can prove win more than they lose, that you can validate, that you can verify, that you can build trust in, and you never hesitate when they're present. Let's go to TradingView live chart read. Small triggers are up. Let's take a snapshot. It's moving pretty quick. We are on the weak side of small triggers currently. And guys, there is 1, 2, 3, 4, 5, 6, we'll say almost 7 things in the way that could create a bounce. The small triggers are down, so I know automatically my only option is to wait for a close on the correct side of them, but my rules say don't trade directly into stuff. Now, if I end up on the strong side of these triggers, these areas are more likely to break. I'll manage assertively, but from wherever my entry is, I want enough money, enough room to make at least $100 before I hit a roadblock. Does that make sense? At least $100 before you hit something solid that could create a bounce. Small triggers are up. Weak side of the small triggers, there's your pullback directly to the mid-band, directly to the zone, directly to the HVA. Small triggers are down, so I'm waiting for a close on the correct side of the triggers. Guys, if they keep pushing lower, I'm going to be below a VWAP, no room to targets. I'm going to be below a mid-band, no room to targets. Crude oil, small triggers up. We missed it. Strong side of the small triggers, room to trouble. That was your pullback to the mid-band and the close above, and sure enough, it's heading up. You had room back to the one-to-ones if you took that entry. You had room to manage before you hit something. Does that make sense? And how cool is it? No trade, no trade, no trade, no trade, no trade. Rules met, off it goes. Finally, don't even have to look. My small triggers are down. I'm in transition, and there is absolutely nowhere to go. Does that make sense? TradingView users. Down, transition, absolutely nowhere to go. I'm okay not being in a trade. Does that make sense, everybody? If you're brand new, it's not going to make perfect sense. You're going to have to study this. You're going to have to practice this. one of the things I did in the TradingView KISS plan is I created a couple workspaces that take the large triggers off of the big chart because you don't need them. It's all small triggers. It also took the colors off of the charts because if you're a Renko bar user, you're going to get caught up on that background color instead of the triggers to define direction. Short with strength, room to targets. Short with strength, you did have room to targets. Short with strength, room to targets. Long with strength, room to targets. Long with strength, room to targets. Short with strength, room to targets. Guys, say hello to the Nexgen automated trend trade system. Taking every rule on Renko bar charts that we just described and taking the legwork out of finding your entries. It's freaking amazing. John and I have had a great time building this over the last 6 months. John's built it. I've just given my 2 cents on stuff, but it's freaking amazing. It tells you when the rules are met. How cool is that? Then you just have to manage it a little bit. It's us, automated. Thank you for that. All right, guys, that's our first hour, well, first 49 minutes. I'm going to take a few minutes. Look at that. Weak side, trouble, boom, shazam, I believe is the phrase we're looking for. And now the small triggers have rolled. Give me a Y if you see it. Price is on the strong side of the small triggers. And I have nothing but open real estate to get to trouble. I'm going to show you guys a trick, TradingView users. Take this trend line. Does everybody see those one-to-ones? I'm going to put a trend line right on those one-to-ones. And I'm going to say, that's my line in the sand. If my entry comes from above that trend line, above those one-to-ones, I'm trading directly into trouble. Does that make sense, TradingView users? If my entry comes from above those one-to-ones, I'm trading directly into trouble. That's a big one. If my entry came from below that mid-band, I was trading directly into trouble. Wait for it to get below. If the triggers were down, right, Sword? If the triggers were down, they've since gone back up, you would wait for entries below it. If the triggers are up, you'll wait for entries above trouble. So the idea is that you can wait and not trade directly into something that could stop the market. Does that make sense? T3 trigger lines 21. What does that mean? Is there a question that I missed? Pablo, are you drinking this morning? Oh, Victor's. Which one of the indicators do I need to turn off on the chart to take the strong triggers out? You could just take the link from the plan, but you may want it on crude, right? So let's do it together, Victor. I'm going to go, and thank you, Pablo. That makes sense now. Go to the T3 trigger lines and click Settings. From Settings, you're going to go to Style, and what you're going to do is you're going to say, that's a large trigger, don't want it. That's a large trigger, don't want it. Large trigger, don't want it. Large trigger, don't want it. And then, boom, you don't have large triggers. Pretty cool, right? Let me know if you need help with that, Victor. And guys, for some of you, the background color may create a challenge as well. Not all of you, some of you. Why would you take the large triggers off, John? John Novak, because for the basic approach to using this in the very simple plan, you're committing to trading with the small triggers initially. The same reason I pulled the HVA out of the plan. And this is setting you up to go for the immediate strength. Now, just like any of our plans, I love this, and John knows the answers, but I'm addressing it like I'm addressing a new student. Once you build your foundation, once you learn how to be on the right side of things, once you stop fighting things, there's a lot of opportunity in the market. There's a lot of different things you can do. If you watch John Novak's post, you see a lot of the stuff that you guys are all working towards. But John Novak has this foundation built in, like he dreams about it. He thinks about it. It takes him a fraction of a second to do all of these reads, right? It takes him a fraction of a second to do all of these reads. Guys, you're not there yet. You're not John Novak yet. So there is a path of least resistance. There is a path of least resistance. All right, guys. I'm going to take 5 minutes. When I come back, we will just start watching the market. We'll read your charts that you post in the room. I'll give you feedback. We'll talk about anything and everything that you want to talk about. We can see that they are trying to break up. They're trying to roll those triggers, but they just haven't yet. Hey, David Geller. Price reached, Fibonacci resistance. Large triggers are a full bar away. Gap. Gap theory. Price is more likely to close the gap back to these large triggers than it is just to go up. That's for everybody. Some of you are studying that right now. Whoa. All right, guys. I'll be back in just a minute. Look at John Novak's posts. We'll start going after your posts when I get back. I'll see you in just a minute, guys. Go stretch your legs. Friends, we're going to get into the chart reads, what you guys have posted. So we'll go back and forth. Victor, getting us going here. Small triggers pointing down. So looking for a sell trade. Price is on the strong side of the small triggers. At 44, it absolutely is. You are below the VWAP, below trouble, and you have room to targets. So Victor, solid large chart read. Solid large chart read. On the 1 minute chart, small triggers change direction, or so I think. Price on strong side of triggers and hit a trouble area. So I expected for trade to go my direction. Oh no, this thing flew the other direction. I know I messed up. I can't recognize where. I love it, Victor. That annotation is, excuse me, is absolutely outstanding. Your large chart gave you everything that you needed to look for a short. Now your small chart, let's see what happens. You're in at 44.75. Let me see if I can get, I can't see it. 44.75, 44.75. Let me figure out where that is. It's hard to tell. So your pullback to a zone here. There's a close on the correct side of the triggers. At the zone, Victor, you're okay. And it does push down, right? And it pushes down right to a zone. And it pushes down right at the outer band. So this outer band, Victor, is kind of like it's an area. And the outer band stops trend trades a lot. And what happened is it did. The zone stopped it. The market comes up. The small triggers roll. And you may have entered below the triggers. 83 triggers on the wrong side of large trigger. John, shh. But there's another thing too. So Victor, you sold the up bar. One of the things that I talk about in the rules on the trading review plan is if you're going to sell that down bar because you know that it's closing below. And I'm not sure where 44.75 is, but this up bar would have closed somewhere up here on the wrong side of the triggers. Does that make sense, Victor? Did you get in before the bar closed, before it finished? It's starting to head down and you got in with it, and then it finished up here? My anticipation skills stink, and that happens to me sometimes. So if you just stick to that little plan, I'm going to get in on a red bar for shorts. I'm going to get in on a green bar for longs. What it does is it keeps you out of that trade, and then you never get a close below the triggers on a red bar until all the way up here. Does that make sense? So just a little bit of a timing issue. And once those small triggers roll, that's where you got to calm just a little bit. Large chart read is perfect. And then we'll refine those entries with a little bit of practice. Nicely done. I'm going to scroll up to the next one. Miss Jen, let's see what you did. Strong side of triggers. Mid-band is a problem. Market pulls back. You close on the correct side of the small triggers. You have room to trouble. And trouble doesn't produce any trouble. When you get to the mid-band, you take profits. Is that right? 76, 76. So right at the mid-band, Jen, you get paid. And it comes back and bounces and goes back up. And looks like that's where you placed your stop. So you could try to get to the second area. And the mid-band ends up holding. So nice looking trade, Jen. Great entry. Good management. You gave the second one a chance. It just didn't go. Gave the second one a chance and it just didn't go. And that happens sometimes. All right, here's the other move. Small triggers up, kind of, but almost sideways. There is some space before the next trouble area, so looking for a buy trade. I don't even comprehend what I did on the small minute, on the 1 minute. All right, 81, 81. So Victor, it looks like your first pullback to the zone and the close above is back here. Do you see it? Stop goes below the zone and it dances. And then there's another close above the triggers, and you've got room to 81 without a doubt. And then there's John's lessons coming back. The smalls are starting to get above. But what you didn't do, Victor, is if you had taken the first one from the area, from the mid-band with the close above, you had some time. By the time you get here, your area, it's already left, done what it's going to do, and it's coming back. Stop makes sense. And then like John said, so these outer bands, trading directly into them is tough. If price is outside, I think you were back inside by the time you took the trade. And your timing is a little off, and it should be, because you're brand new. Long was the right idea. You had room back to the 1-to-1s, and it looks like it eventually made it. Where did you, oh, you entered over here. I'm looking up here. So what you have here, there's a couple things that we can talk about. Let me blow this up a little bit. Am I capable of blowing it up? No, let me blow this up a little bit. I was looking in the wrong spot. All right. So the triggers are up. But your entry 63.75. Do you remember when I said one of the things you guys can do is you can draw that line on the top of the zone you're trying to get out of. You can draw that line. You're getting in below that line, Victor. 63.75 or 63.69. Maybe it's sitting right on top of it. Did you go short or long? Is that your exit? You went long, 63.75. Okay, so you are above the line. You do have room. You're coming from a termination. Yeah, you just missed your pullback. It took me a second, Victor. You just missed your pullback. But John made a good point. When you are outside of this outer band on the large chart, longs are going to be damn near impossible. Longs are going to be some of the hardest trades that you ever take. Going with the direction, and if your rules aren't met to go with the direction, wait until it gets back inside. Does that make sense? I'm looking over here, and I should have been looking over here. So guys, you'll see this a lot. If you are extended, right? If you are outside, just look to go short until you get back inside, and that's when the longs seem to work a little better. And you'll see it. Let's see if we can find another example of it. Once you're outside of those outer bands, shorts are going to be easiest, and longs are going to be difficult until you get back inside. So thank you for that, John. Good point out there. Good pointing out. You getting there, Victor? Your large chart reads are solid. That's 75% of it. All right, Paul W. I love all you TradingView users. 15-minute triggers up. You're at a mid-band that is so far holding, so directly into a termination condition, not the wisest long. Closed above the small triggers, held your stop, and it went right to where it was supposed to go from the strong side of the triggers and good stop placement. Take care, Pibbies. Paul, this is great. You followed the rules for entry. You had room to get back to trouble. You kept your stop in place because nothing changed on the large chart. and you were able to get to your target. Really nicely done, Paul. Gonna make a TradingView user out of you yet. All right, Steve Diego, let's get back to some dynamic Renko charts, right? I love this. Steve is the epitome of momentum and path, guys. Momentum and path, momentum and path. With strong triggers, with absolutely nothing in the way. His first entry is a pullback. Well, it pulled back to the areas right at triggers. He catches it on the way up. Absolutely perfect. Really quick profits. And then when everything breaks up with momentum and path, he waits to get beyond the decision-making zones and just jumps in with it. Gets out at trouble, waits for the reaction, gets in on the other side of trouble with all that momentum, and rides it to the next trouble. Absolutely beautiful, Steve Diego. Momentum and path, trading from trouble to trouble. Trading from trouble to trouble. I mean, my goodness, that's a recipe for success if I've ever seen one. And then go in the other direction. Strong triggers, room to targets. You take the momentum style entry, hold your stops because momentum is there, and perfect exits right at trouble. Chili dog buffet. Amen, Ron. Momentum and path, guys. If you are a ninja trader, once you learn those two concepts, you will find a way. You will find a way to capitalize on those advantages. All right, Andy V. Not best conditions. I like it when you guys write that on a chart. So the small triggers are down, and it depends on where we're talking on this one. Transition side of the small triggers, absolutely nowhere to go, right, Andy V? Absolutely no room directly into an area. Pulls back. Is entry possible for 63.71 or 63.72 or better to sit on hands? So the entry is always possible, right? All you have to do is mash the sell button, Andy. Are you trying to follow the KISS plan? Are you trying to keep it simple right now? Keep it focused, follow rules? So 15-minute not trading directly into a zone. No terminations on the zone. So you really can't say that there was an opportunity if the first rule for both trades on that list aren't met, right? And sometimes it's just not our money. Now, Andy, as you grow with the software, you might say, I'm willing with all of my triggers down to sell a zone. But if you did, you probably still got stopped out, right? Because look at the bounce. And then by the time you take the entry, see what happens. Good stuff. Good read. I think that if you're following the plan, it's very much a sit on your hands moment. All right, Cav. Cav says, triggers are wide and up. Took that trade on the pullback. Pull back into the triggers, place a limit order inside of the large trigger, place your stop below the blue fib. All right. Got you late in there, but with all that momentum and path, it takes you right to the promised land. Best entry was down here, right at support, right inside of triggers. You do take it a little bit late, quite a bit late, and when you're in at 95, 75, I think it is, you still have plenty of room to trouble to capitalize. Nicely done, Cav. There it is again. Everything is up. Pulls right back to support inside of triggers, and you find a way to make money. Pretty cool. A lot of scrolling. Is this Paul? Woo, look at that spike. So Paul, large triggers are up. You enter at 25.02, so way up here on the spike, directly into trouble. Just directly into trouble. Just no room to targets, Paul. Does that make sense? No room whatsoever to targets. And guys, I'm telling you, room to targets are going to come into play on everything. Having room to make money is so important because if you don't have room, what you're saying is, man, I sure hope this thing that I am fully aware could stop the market doesn't. And that's not always the easiest way to trade. Miss Jen, correct side of strong triggers, pulls back to all of the areas. You get in on the correct side of the triggers, manage out at the first side of trouble, manage out at the second side of trouble. Because the large chart says nothing in the way in the strong side of triggers, you thought odds favorable momentum would drive it? Right on. So, two schools of thought, right, Paul? I think odds favorable momentum is going to break it. Or you could say, I'm going to let it break, or I'm going to have room to get back to it. And yours was just at the very type of a huge emotional spike. Jen waits for the pullback from the huge emotional spike, gets in on the correct side of the triggers, and from her entry down here around 48-ish, I think. No, Jen, you're in pretty late at 95. She still has $100 worth of room to get to trouble. And she takes that $100 and then takes $200 on the second. Nicely done, Jen. So just calculate from where I enter the market, do I have room to make money? And if you do, outstanding. Rock star it. And if you don't, it's okay to not be in the market, guys. Cav, good top, strong triggers, potential to break, perfect pullback, easy money. Bingo, bango. 4 trades in 15 minutes. Strong triggers. Looks like directly into a termination condition. Pullback. Wrong side of the triggers. Thank goodness it didn't keep running off that termination condition. Maybe a little lucky when you switch to simulator. Nicely done, Kev. Weak triggers. Clear path. Perfect entry. 2 out of 3. Medium probability. Nicely done, Kev. Alright, let's see what's next. David, did I miss a post from you? I see John Novak answering questions, but I don't see a post from you. Did I miss it? Am I not to it yet? Cav again. Strong triggers, clear path, pull back to an area and go. Cav, you seem to have a little pattern here. There we go, David. You were next in line. Got in with 3 triggers through fib. Waiting for 4 would have kept me out with a green background. Alright, I'm going to give you my 2 cents, and before I look at John's 2 cents, David. So when I look at 3 triggers through, and man, that's a good look. I'm not going to lie. You have a termination that reverses the market. That is bonus number 1. You have odds favorable momentum. You have bonus number 2. You have 3 triggers through. That potential to break is there. But it's only potential. And I'm excited to see how mine lines up with John Novak's. So momentum is present, and you've got a pretty good range of areas inside of triggers. You could say that the entry is there, but you don't have the clear path. Does this make sense? It's only the potential. This is what we call one of those potential to break trades. So the biggest killer of that potential to break trade is divergence. What's in the way? That Fibonacci area that's not broken, right there. that Fibonacci area that you said only has 3 triggers through it is not broken. It's only the potential to break. Does that make sense? Well, just let's make sure this makes sense first. That is only potential, because there's a lot of opportunity there, David. There really is. Okay, so with momentum, and you have it, from a strong top, David, you have it with 3 triggers through, you have the absolute best look for that potential to break on your large chart. Does that make sense? Your large chart read is beautiful. Okay, so I'm going to give you the one thing that's going to help you. So divergence, and I want you to look at it from this standpoint. You have momentum, you have an entry area, but you only have the potential to break. So divergence is a loss of momentum. So your first divergence, David, you begin losing momentum, that advantage that you're clinging to break this area. When the second divergence prints, even more of that momentum is going away. So what's happening is your small chart is telling you that there's a fight coming from buyers and you're trying to break an area. You're trading potential. Divergence is the biggest killer of that potential to break look. Does that make sense? Without divergence, all day long, 100%. I love it. But that's one of the things, when you look at the KISS plan, the very basic plan, it reminds you no divergence on the 5-1, because that really is, that's the biggest killer. So when you end up with 2 of them, even more so. And then I think John's talking about, because it's not perfect on the small chart, there's 2 ways to look at this. And John, I love this, because this is going to be my next direction. So because of this divergence, David, and your large chart is perfect, this is where you can exercise your right to demand your entry. If you really want to go down with a large chart, you can wait for a reversal bar, right? And ideally, you wait for the reversal bar from the areas inside of triggers. And when you don't get one, it's an avoidable loss. And when you do get one, you can trade that potential to break and manage it a little more assertively. Does that make sense? But once you're up here, do you notice how you're on the wrong side of the triggers? You're where the market shouldn't go. That's not the easiest place to take a short trade. And sure enough, it trades directly into support, gives you the third divergence, and heads back up. So I think the entry rules, if you have to wait to see if that divergence is true, David, you don't get in low because it takes 2.5 bars to produce it. Does that make sense? That's a great picture. Your large chart is the best look I have ever seen for a potential to break trade. It's just your small chart. Yeah, and your small chart would have kept you out. Good stuff, good post. And I like that because John and I had the exact same thought. If you wait for the reversal bar from the areas inside, it gives you a fighting chance. Nicely done, David. Thank you for posting that. Good lessons in there. Thank you, John, for the little idea there. And then same idea on the bigger chart. When it's only the potential to break, once you're on the wrong side of everything, it's less likely to break, even without seeing the small chart there. I like the little John Novak 1-2, right? Coming in, Novak brothers. And that's it. Sometimes it doesn't work no matter how pretty it is. Amen, John. All right, Derek. So bad entry and loss. Win against the triggers. So let me see what you did. On large, where are we talking about? Did you go short right here? Help me out, Derek. Did you go long or short? Oh, you did go long. Okay. So where did you go long? Right here? That's your first long? confused. Where did you go long the first time? Went against triggers on long, no gap. Background is red. I went long, not a good entry at 63.82. So you went long up here, directly into the fib. I want to make sure I'm reading your charts right. Please look at the second entry. Were there two charts posted, Derek? I've just got one chart. Your second entry, oh, okay. Second entry, strong triggers, right? Okay, I'm getting there. It takes me a second. We're getting there. But I can't see it on the small chart, and that's what confused me. Strong triggers up. Midband is not a termination because there's no gap. Great chart read, Derek. Room to trouble. And did you just jump into the market and say, with all this momentum and nothing in the way, I'm going to ride momentum up to Fibonacci resistance? Yes. Hold on. Let's go find it. So you went... See how it's hard to give feedback if I can't see your entry? You went long right here because of all of this goodness, and you exited right at trouble because of those shenanigans. Absolutely beautiful. Derek's perfect. Welcome to the chili dog world. Nicely done. Nicely done. You want to see something cool about your first trade down here? That was your first entry right there, right? Where the circle is? Check this out. John Novak started teaching this trade in 2004, Derek. When you reach a termination, no, I'm going to show you something cool. When you reach a termination, when the small triggers roll up, you can buy a pullback to those small triggers, and it very often looks like a pullback to the large triggers. You were just ahead of your time. You were ahead of your time. Yeah, John, Claire's got a broken wing. She broke her hand. She's learning how to type left-handed right now. Yeah, we use that skill every day now. So this one is a little more aggressive, a little more assertive, Derek, but it's still a really good chart read coming from the termination. But your execution up here is 100% rock solid. Nicely done. Nicely done. John says, if Derek can do it, I'll take a momentum trade to go up too. Nicely done, John Novak. Trading with momentum and nothing in the way. What a concept. Really? Again? Who is this? Pete? Derek, you're in good company. Everything says up. Why the panic stop? Realize gap theory was in play. And then when it goes back up, perfect. From 96 to 06. Derek, you were in at 96, right? And you were out at 06. I like it when this happens, guys, because what it means is that a chart read is just a chart read. Advantages are always advantages, no matter what chair you're sitting in, no matter where in the world you are. Once you learn to read advantages, you will find a way. Nicely done, Pete. John Novak. When every chart has terminations at the same spot, 80% is a top. Take your longs off. Management. When every chart hits something that could create a bounce, get the hell out. That's a good picture. That is a great lesson. You guys should pay attention to that. All right, Miss Claire, when reading your... I just want to give you my phone number. You can just call me and ask me your question. I'll answer it. All right, guys, we made it through all the pictures. John, when he was in high school, he quit his typing class, said, I'll never use this skill. Talk to type. Used Mavis Bacon teaching typing when AOL charts came out. Got real good, sort of. Claire, is talk text to type an option for you? That's a good idea, John. Talk to text. That's a good idea. All right, guys, we made it through all of our pictures. So let's look at the large charts here, guys. Termination, full reversal, odds favorable momentum, and we got some stuff in the way. Do you guys see it? Price reached the termination, only 2 triggers are through. We haven't quite reached that fib, so it's only 2 triggers, and we've already had 1 divergence. And we know that divergence can kill the potential to break, and sometimes it's just better to go ahead and let it break. Whoa. Should have been watching this market, right? Strong triggers all day long, breaking areas. Pull back to areas inside of retracement zones all day. None of it was easy, guys. Multiple divergences, bigger risk. But the pattern holds true. Pull back to a mid-band in the retracement zone. Pull back to support in the retracement zone. Support in the retracement zone. Pull back to support in the retracement zone. Pull back to support in the retracement zone. Momentum for the win all the way through, guys. Momentum for the win all the way through. That's awesome. Trading view. I don't know why I do sound effects, but I do. All right. What's our read, guys? You guys want to do it together? Let's do it together. Small triggers, up or down. This is the easiest one, right? Shannon, talk to me. Victor, talk to me. Pablo, talk to me. Are those triggers going up or down? Down, you say? Okay, only short trades. No, it's up. Can you guys hear me? Nobody wants to play? Thank you, Jen. Small triggers are up. I'm only looking for up trades. Where's the most current price? Does everybody see that the price is above those triggers? It's left of those triggers. We are strong side of triggers. Jen, you're getting ahead of me. Strong side of triggers, guys. That's good stuff. And now the ever important question that seems to be coming into everybody's charts. Are there room to targets? Is there a clear path? Is there trouble? And then Jen said it. Jen said, look, Mark, you're trading directly into a zone. The rules say don't do that. So here's the cool thing. Is it okay to just not even go to your small chart? To say, you know what? I'll let that zone break. I'll let price get above that zone. I'll let everything get north of the thing that could stop the market. And if it does, wonderful. And if it doesn't, I'm not trading into it. And guys, that's the difference. And Thursday, if you saw my post, Thursday, all of us collectively are going to sit in front of this NASDAQ chart together, and we're going to trade this plan, not that plan. That's Ninja Trader. We're going to trade the trading view plan live. And the only time I'm going to pull the trigger, the only time I'm going to take an entry, and guys, I'm going to do this in a live account too because I believe in this plan, is if, I'm going to see how many times I can put the wrong plan up. If my large chart says look for an entry, I'll go look for an entry, but I will have to follow a checklist. So I'm going to hold myself accountable to the checklist. And what you guys are going to realize is that there is an awful lot of the day where you don't trade into these areas. There's an awful lot of the day where you sit on your hands. Normal time, Jen. I'm going to show up at 9 a.m. Eastern, and we're going to review the trading plan. And we're going to answer any questions you guys have about the trading plan, whether it is entries, whether it is large chart read. And then we're just going to sit, guys. There's going to be a lot of dead air. So Thursday is a great time to ask questions. Thursday is a great time, but I'm not going to do We're not going to do NinjaTrader chart reviews, guys. I'm not even going to cover NinjaTrader rules on Thursday. And then Brian17 asked me, hey, Mark, can we do the same thing on NinjaTrader one day? Brian, the answer is yes. So we'll pick a day next week where we pick a market and we will follow the KISS plan to the letter, guys. 90% of your day is waiting. 90% of your day is sitting on your hands. And one of the things, guys, as long as I'm in this area, there's my trend line again. I don't want to take an entry from below that area. I don't want to take an entry from below that green line because that means that I'm trading right into the top of a zone. And it's the top of a zone that's already held once. Look at it right there. Bing, bang, boom, right? What an amazing safeguard. What a beautiful way to not form an opinion. So Thursday is going to serve for a couple things, guys. One, it's going to build a lot of patience. Two, it's going to show you exactly how to time your entries. It's going to give you everything you need to find success with the software. One-to-ones, prices below. Guys, don't trade into it. You don't have to. Unless the triggers go down, then take the short, right, TB? But until that happens, it's cool. Let's relax. Small triggers up. Strong side of the small triggers. I don't have a momentum trade directly into a zone. So what has to happen? Two things. Either the market needs to bounce back, and I will call my shot. Let's get paper trading on. So either the market bounces back, get off of there, and I have to find an entry from a zone. I think 90, it's probably even higher than that, Junior. There's just not always an edge. There's not always an advantage, guys. There's not always a pattern presented that you can go back and study and say, hey, guess what? This wins more than it loses. Hey, guess what? If I go back and find this picture 100 times, 80 of them produce winners, guys. That's what day trading is about. Day trading is about being patient, right? And when you have strong triggers and you have the potential to break, well, actually, you have a clear path on the fibs. You don't on the divergence high. And you've already got multiple divergences. David, we're going back to that lesson again, where it's not your highest chance of success. Yours does not copy to the 1 minute. Yeah, let me figure out how I did it, Jen, and then we will. Let's double click on it. And always show stats, price labels, middle point. Hold on, text, nope. Coordinates, don't need it. Visibility. Maybe that's it. Under visibility, go through and click those. Let's see. Yep. Minutes. So you don't need seconds. You don't need ticks, hours, days, weeks, months, or ranges. You just need it on minutes. I didn't know the answer, so thank you for asking that. So one of the things that we're going to do a lot, guys, is I'm going to ask you, do you see how not trading into that area avoids a loser? Do you see how not taking a close on the correct side of the triggers directly into the area keeps you from losing money? Because everybody is focused on making money. Everybody wants to make money. Everybody wants that money. Sometimes it's the money that you don't give away that's the reason you have a great day. Victor, odds favorable. Not two triggers through. Absolutely no triggers through resistance. No areas inside of triggers. You pulled one off, Victor. Is it a good trade because it won, or is it a good trade because you followed a plan? Nice job. You take the fifth. That's all right. Let's get some pictures, Shadow Pics. So you're in Trading View? You want to see something cool, brother? Victor, do you see how you don't have a clear path, how you don't have an entry defined by an area inside of triggers? The only thing you have working for you is momentum, and momentum worked. You even wrote area inside of triggers without one. You just wanted to be in the market. You got tired of waiting, my friend. And it worked out. Momentum for the win. Momentum for the win. Shadow Pics, check it out. On TradingView, anytime you take a trade, see the camera up here? Oh, so you're not taking, you're in a different funded account. Right on. How can you not take picks yet? I mean, I love that you're making money. Man, look at that termination condition. Still holding. Congratulations, though. Up a grand is great. 6 orders buying pullbacks on the way up in oil. Nice job. So you're saying every time you had momentum, you just kept buying? Just kept buying pullbacks until it stopped working? Nicely done. All right, guys. Strong triggers up. Absolutely nowhere to go. Do you see it? Price reaches 64.25. It's a huge fat Fibonacci resistance area. None of the triggers are broken. Rule number 2 says if you choose to take a trade, you are trading into a termination condition. I'm not telling anyone when to enter, when to exit. It does not fit the KISS plan. And you're missing an advantage, which means that it's medium probability, which means you want to manage it a little more assertively. Let's see what the S&P says. Strong triggers, only the potential to break. Multiple divergences. David, do you remember this lesson from earlier? What the biggest killer of that potential to break trade is? It's divergence. So if you were going to enter this trade, you could have tried the mid-band reversal bar. It didn't work. Are you going to try it again, even lower? Or are you just going to say, man, I don't have to be in this trade. I don't have to take that long trade. What an amazing safeguard to keep me from throwing money out the window. They look alike for sure, don't they? Guys, potential is just that. It doesn't mean that the market isn't going to continue up. What it means is that it's more likely to push down first. That's all. It's more likely to push down first. Every trigger line is above support. Every trigger line's above this support. Every trigger line's above that support. It's more likely to go up than down. There's not a trade. Good lesson on that one today, guys. Great lesson on that one. Trading View. Now we're below the 1-to-1s as well. Does everybody see that? Small triggers up. Transition. If I took a close on the correct side of the triggers, there's those 1-to-1s right in my way. Wouldn't that put me directly into a zone, directly into a 1-to-1? Oh, there's the close, getting above it. And then there's no room to that zone. Let's see what happens. Let's see if the 1-to-1 holds. Let's see if that zone continues to hold. This is going to be one of the challenges that you guys are going to work through. Because if this goes up right now, you're going to believe that you can trade into trouble, right? You're going to completely ignore the fact that trouble stopped you twice. And if it goes up, you're going to be inclined and tempted to break your rules. You're going to be inclined and tempted to change your plan. That's okay. You can. You could take that long trade directly into the bottom of the zone. You could take that long trade directly into the 1-to-1s, but does it increase the likelihood of success? Is it an edge? Is it a pattern that you can prove wins more than it loses? This one had strong triggers up. we've already reached trouble. If you took a close on the correct side of the triggers, let's use the trend line again, that's where your large chart trouble resides. If you took a close on the correct side of the triggers at 56, you had a little bit of room to get back to the first sign of trouble. There it is. You had a little more room to get to the next sign of trouble. Do you see, guys, having room to targets? And I don't know what's going to happen there. Right? Triggers are up. Transition side of the triggers. The rules say wait for a pullback. There's the box we made earlier. The rules say wait for a pullback to an area, to a zone, to a mid-band. Not jump in on the other side of the triggers from the middle of nowhere. Do you guys see it? That was decidedly a close on the correct side of the triggers. But it didn't come from an area. It didn't come from a zone. Zones create the bounce. Do you guys see that one? That's a very tempting entry. But it's not from the area. And the rules are very specific, guys. Areas are what create the bounces. Now we're getting back to the mid-band. Oh, Junior, I'll show you exactly what they are, but they don't have anything to do with the plan. These horizontal lines are the highest concentration of sellers in that bar. These horizontal lines are the highest concentration of buyers in that bar. That's it. You don't need to know that. These high concentration levels are what create those high volume areas. So when this bar broke out to the upside and was confirmed by an up bar, Junior, it creates this green line. That green line is like a line in the sand saying, hey sellers, I dare you to come back to it. And if you do, there's a really good chance we're going to unload. Does that make sense? And guys, we're waiting for a close on the correct side of the triggers at the area in order to trade with the up small triggers from the weak side of the triggers. There is room to trouble at 18. Does that make sense? Okay, Junior, usually means it doesn't make sense, but you want me to stop talking. I don't know if that's the case here. No, you're good? What I do to them, Junior, and this is just me, I turn the opacity down because they don't fit into my plan. And it's a lot of noise, isn't it? All right, guys. This is where we need to see that close above. Everything is up. We're above trouble. We have room to trouble. This is where the rules say you have to have a close on the correct side of small triggers to attempt the long. Does that make sense, everybody? We are literally watching a potential trend trade coming to be. And if you never get the close above from the area, what does that mean? It means that you're not in the market. So you Renko bar users, if you're still on the Renko bar mentality, you jumped in at the mid-band on the pullback, right? And now you're a little grief-stricken. That's that kind of difference between the 1 minute and the Renkos. We're still above the 1-to-1s at 03. But if we go below the 1-to-1s, Jen, do you have your trend line ready? There's that line in the sand. That's that line in the sand. I don't want to take an entry below those 1-to-1s. I want to be above those 1-to-1s. I want those 1-to-1s behaving as support. I want to see the rejection from the 1-to-1s. I want to watch the market close above those trigger lines. And if it doesn't, I choose not to take the trade. Is everybody with me on that? I like to use it, Jen, when I'm trading near trouble. I just want to see on my small chart exactly where that trouble is. And that's the easiest way that I've found to do it. 4, 3, 2, 1. Did not close on the correct side of the triggers, did it? Show me a picture of your settings, Jen. So double click on it and show me a picture under visibility what your settings are. Guys, if we get a close above these triggers, do we have room to trouble? We've got 30 seconds to think about it. We've got 30 seconds to think about that entry. We've got 22 seconds to think about it. 22 seconds to make sure that the triggers are up. 22 seconds to make sure that there is room to trouble. 22 seconds, 13 seconds to wait for that close. So, okay, do me a favor, go to your search bar and type in TradingView. Look for the TradingView app. There's my close above. Stop loss has to go below the pivot initially. Oh man, I accidentally went in 6. There's my first sign of trouble. I accidentally went in 6 because it didn't register. But the market is up. There's room to trouble. We waited for the pullback to the area inside of triggers. We waited for the close on the correct side of the triggers. I did not mean to get in 4. Whoops. Or 6. That was me just being happy. So I'm going to get rid of 4 of those. And let's go back to a 2 lot, and now the risk doesn't seem so crazy, right? So K-Price, just go find your TradingView app. And you probably have a desktop icon that looks like this. Click on that and it should open up for you. If you guys need to switch and take partials from 2 contracts, you're going to have to drop this down to 1 contract and put a limit order, like a sell limit order right there at trouble, saying, hey, if it gets up to here, that's trouble. I want to take half of my position off. Guys, I want you to understand that following the rules doesn't guarantee a winner, but following the rules consistently has the ability to produce more wins than losses. Has the ability to make sure that you have an advantage, that you have an edge, that you are trading a pattern, that you can prove wins more than it loses. And they may come get us here. It looks like they might want to, because now we're getting back below the 1-to-1s. We are on the weak side of triggers, and we entered following the rules, but they don't all win. I'll take a $180 hickey on that look all day long. So Jen, you should be good. 45.75, 45.75. Which trend line are you using? The horizontal line. Let me just compare. Oh, they got us. Let me compare real quick. So this one I think is the trend line. Are you using this one, Jen? From the top? Or are you using the horizontal line from the boxes? Yep. And you're right, John. But we're following entry rules, and we're learning the timing of the entry, using the timer, using the areas, not jumping in from areas. So what we're doing right now, guys, is we're practicing how to enter the market. That's what that was. And now we're below trouble. And there are a million things, and John Novak's going to throw every one of them into the room. There are a million things as you gain experience. We didn't go in with price on the wrong side of the triggers, Victor. We entered with a close above the small triggers from the area. We're on the weak side of the triggers, but there's still up triggers. There's still room to trouble. There was still a pullback to the area, and there was a close above. Does that make sense? We were not, but it's not the wrong side, it's the weak side. Still went up there with those up triggers, right? Still went up there with those up triggers. Still went down with down triggers. It's English. So, but language is important, right? It's not the wrong side, it's the weak side. And because it's the weak side, it means that if we take the trade, we have to make sure we have room to trouble. And we did. And we had an area for a bounce. And on our entry, we even had the small triggers rolling up a little bit. Yeah. We put our stop where the market belonged. Guys, it just didn't work. It just didn't work. They're still trying. Can we get above trouble and look for an entry? You guys see it? There's that trend line again. Can we get above trouble and find an entry to continue up? I don't know, but that's what we're going to look for. Boaz. Strong triggers, potential to break, pull back to the area inside the triggers. It never goes out of the retracement zone, and you capitalize and get paid right down at the one-to-ones. Nice trade, Boaz. Guys, you notice its potential with divergence. I don't tell you how to enter the market. I let you know when your advantages are going away. But it's up to you to make that decision. Boaz, you did it nicely. You relied on entry, you relied on momentum, and it worked out. Entry long 64.23. Should have waited for the pullback. No pullback, bad trade. Well, let's talk about it. So, Derek, are you trying to take the chili dog? You were. Cool. So there's one thing about the chili dog that's so important. There is one thing about the chili dog trade, and that is the back of the price bar clears on the 13.2. That the tail end, the back end of the bar clears Fibonacci, because decisions are made at Fibonacci areas, and as long as the back of the bar hasn't cleared it, that area still may hold, and that's exactly what it did. Does that make sense? That's that one piece on the chili dog that everybody tends to break rules on. Guys, it held again. That's that one piece of the chili dog that people forget about, getting the back of the bar past it. On both charts. It was the right thought process, 100%. So check it out. So when the back of the price bar clears here, there it is right there. That's where price is. That's where you entered. And that's what got you up to trouble. That's your perfect chili dog. From right around 96, same way you took it, up to about 12. Beautiful trade. Quick $100. Does that make sense, everybody? If you're trying to do those jump-in trades, letting the tail end of the bar clear makes all the difference in the world. If you're doing those jump-in trades, letting the back of the bar clear, and you had room, and then when the jump-in trade fails, if the charts are right, very often it becomes a trend trade. The same is true on TradingView. When your momentum trade fails, very often it becomes a trend trade, if the conditions are correct. John says he's short NASDAQ. No pictures, no nothing. But let's see what he's working with. 3 divergences in the same price range, right at Fibonacci resistance, every indicator pointed down. On one chart, I can say to John Novak, that is a hell of an advantage. The system thought so too. Nicely done, John. Jen, shenanigans. Jen's got some fibs up there that John doesn't have. Jen, John's chart doesn't use synthetics. It relies more on that momentum and that 21 EMA. And sure enough, down that mofo goes, huh? And guys, this is one of the big differences between NinjaTrader and TradingView. TradingView doesn't say go short yet. Didn't set up an HVA trade yet. So there's going to be times where your Renko charts seem like they're creating an advantage. And there's going to be time where your TradingView chart seems to be creating an advantage. So here's our termination. This is not on the very simple plan. Price comes away from a termination. Smalls get below the large. And guys, there's a trade that says sell that HVA line. Set up a limit order. And if the market pulls back, sell that HVA line because of the termination. We'll put it right at the 1-to-1s, just below the zone. Because of the termination, because of the rolling of the triggers, because of the HVA line. So John's already short, hoping it doesn't come back. TradingView hasn't given a rules met trade yet. After that monster down, you sold the pullback. John, you had the advantage of the other charts on that one. That's not giving anything there. Your divergence is not plotting. Where is my divergence? Which chart? Oh, look at that. Good eye, John. So let me put divergence back on, guys. If you ever get that exclamation point next to it, you can remove it and put it back on. Zone and 15-minute PSO on 1 minute. 1 minute, all you have to do is cheat and make it a different or size, and it will recalculate. Oh, that works. I didn't know that. But now I have divergence. I still didn't have a PSO there. And here comes the pullback, right? And my rules say, sell the pullback with strong triggers from the termination. And now it's just up to them to come and get me. This is your HVA trade. Price reaches the zone. Smalls get below the large. Sell a pullback to the HVA. Your stop will go a little bit above that zone. So maybe $100 risk if we get the entry. 110 per contract. And then we will look at targets a little bit lower. Does that make sense, everybody? John says you can adjust it. What I did is I just deleted it. And then when I deleted it, I went back to indicators, invite only, and re-put it on. John will see things on your charts that even I don't see sometimes. He wrote the software. Of course he did. Of course he does. So guys, if you didn't take the Rockstar entry up here, this is kind of the second shot. This is your second chance. This is your HVA trade from a termination, and it does fight small triggers, which is why I didn't put it in the very basic TV plan. Because if you're a brand new user, get in the habit of not fighting those small triggers. And then once you get comfortable with a trade or two that has all those advantages, then what you'll find is that HVA trade is a beautiful addition. And it's a great way to catch tops and bottoms. And those are the ones that when they work and they work well, they really, really run. Did you get it fixed, Jen? John says it's probably not going to go to the HVA. That's his guess. That's his chart read. It may, but he's got the perfect trend trade on his charts, and I've got the perfect HVA setup. I might not get an entry. John said that, so it does. Add contract short. That'll guarantee they come up and get me, guys. They're dancing. They're making decisions. The small triggers are still up, but my rules are meant for an HVA. Does that make sense, guys? I'm not forming an opinion. All I'm really doing is trying to follow a plan, follow a set of rules that I can prove wins more than it loses. And as usual, John Novak is probably right. They're probably not going to come get me. And that's okay. And maybe they will come get me. Because the small triggers are up, guys, because the small triggers are up, normally you wouldn't set a limit order. But because this is a different style trade, this is an HVA trade, it has a different set of rules. Here comes the spike. Here, we'll get it right at the bottom. Oh no, I moved it because I was trying to make it an HVA. I think I just missed it because I was trying to put it in front of the HVA. That's funny. Hey, Cav, have a good one. Oh, John's going to rip me a new one privately. Go now if you believe it. There we go. We are in low. We'll put our stop loss up here. We'll put our profit target down at treble. Or if it really is a top, put your profit target even lower, right? Take half of them off at the first sign of trouble. That's the worst entry ever, isn't it? Wouldn't it have been great to be in just below the zone? But that's your first shot at a short trade from a termination condition. Stops above the pivot that gets us in. Every indicator is down on the small chart. Large chart has a clear path to get to trouble. It's a horrible entry, John. How do I get that to show money? Sometimes it will and sometimes it won't. More settings, trading. It says money all the way. I'm going to turn it off. Turn it back on. Maybe that fixes it. Position, brackets. I don't know. So guys, the correct entry was the pullback. And it's still going down, right? And if we get lower than 17, if we get through that zone, that's when the market is more likely to start dropping. That's when we have some room to get to where we want to be. Any questions? And even using TV, NinjaTrader helps with the idea shorts. So John added on. Nicely done, John. Are there any questions of why the HVA was the correct entry, why the pullback to the zone was the correct entry, and not my super late entry? When can we start drinking? You can start drinking right now. Guys, Thursday is John Novak's birthday. Did you know that? He's going to be 78 years old. I can't believe he made it. but the pullbacks to 31. Great job, Shadow Picks. Selling the market worked in oil. So Shadow Picks, your job now is to go grab two friends, put them under each arm, bring them to Nexgen. It's not late if you get to the target, just waiting for confirmation. Guys, look at that. Rules work, don't they? Nicely done, Shadow. Nicely done. Good stuff, man. We're still going down, aren't we? Everything says down. Your small chart's picking up speed. There's still nothing in the way of the large chart. No stop movement yet. No stop movement yet. Haven't had a reason to move stops yet. That was from his phone, John. Appreciate that. That's what we try to do every day. How are we feeling? Trading View Plan users, Trading View Plan users. Best entry was right here at the bottom of the zone. I messed that one up. I'll admit that. I'll own that one. We got in late because we believed in it, but we can't adjust our stop because of our late entry. Smalls are down, large are down. Smalls are trying to roll. I got nothing but real estate to go down. We'll see what happens. From 3 termination conditions, I'm not looking for a close on the correct side of the triggers, especially with odds favorable, momentum down. So we're just talking through it, right? What do we see? What does it say? What does it mean to us? Terminations everywhere. Even those 1-to-1s are right there. My stop's on the other side of the 1-to-1s as well. If this is really going to be a top, if this is going to be the beginning of all the down moves, we're in a good spot. And if it's not going to be a top, if they're going to push it back up, we'll know it when they hit our stop. 23 out on chart? No. You could. Smalls below the large, pull back to the midband. But what we will do is if we get this down bar right here and it closes lower, we'll move our stops just above that pivot. Does that make sense, everybody? Because we're not adding on, John. We're taking basics here. We're not John Novacking the market. We are not playing Billy Badass. We're playing Johnny Conservative, learning how to read the indicators, learning to think through what we see. And that bar didn't close down yet. Still didn't close down yet, right? So I don't really have a new pivot. I've got 6, 5, 4, 3, 2, 1. There's your down bar. If you were so inclined, you could get your stop up above that pivot and reduce risk. They still haven't broken the area. The small triggers are still working their way up. So if anything, what we've done is we've protected ourselves. The buyers tried, they failed, it created a down bar. What a great way to manage risk. You have $80 risk on a NASDAQ trade from a top, and you have nothing but money potential going down. K price. Same idea, all of the terms. You get in on the way down, and you're looking for the VWAP in the midband. I like it. Nice trade. Didn't have the HVA, but you waited to get in on the right side of those small triggers. Now it's turning against us, guys. We'll see what happens. I don't care. 80 bucks is worth it. I want to double check this one more time. I didn't read. Prices between the large triggers. Small triggers are crossed down, headed short, although background is still green. So K price, did you see that one of the things that I've done is on the charts I'm showing, I've gotten rid of the large triggers so that the background doesn't go green or red, because it really is the small triggers. The one challenge on this trade, and it's not even a challenge because you traded to trouble, you have room to trouble. You get a pullback right to the midband, close on the correct side, looking to continue from that good top. Everything says down. You're into the first area of trouble, and we'll get a good idea of what the market wants to do right at that area. Nice trade. They came and got us, didn't they? And my small triggers are still up. The correct entry creates a much more tradable scenario, guys. Jen, late entry too, and it's just the same thing. And Jen, you have a zone right there. So you traded directly into the zone. It's the right trade. It's an HVA trade. And guys, now you have strong triggers up. And where did they come right back to? The HVA. That's where John Novak says, sell again, sell again, sell again. Guys, there he is. If you are a brand new user, guys, you took your shot from the top, right? You took your shot from the top. Now your small triggers are rolling. They're trying to. You pulled back to the zone. You pulled back to the HVA. If you were going to take a short trade, you could just buy the HVA. That's the calculated risk John's talking about. Or you could say, Mark talks every day about not fighting those small triggers, being patient, give up a couple ticks, get in on the good side of things, right? There's a cost for confirmation, but there's also a reward if the market decides to continue up from above these one-to-ones. If the market decides to continue up with small triggers that haven't rolled yet, how many times can you sell a top and it not become a top? My record, I think, is 15 or 16 before I finally quit trying. Anybody else share that story? Small triggers are rolling, right? Let's see if we get a close on the other side of those triggers. John's about to be very smug. We'll see what it does. We've got 47 seconds to think about it, guys. But now we've got the triggers in our favor. Now we're on the strong side of the triggers. We've already had the pullback. We're below all the trouble. And those sons of guns. Those sons of guns, right? This is going to happen. This is going to happen every now and then. And John's exactly right. It's a calculated risk. If you choose to re-enter at that HVA because of the termination, it's a calculated risk. If you're a brand new user, you're not running calculations fast enough to take that risk. Does that make sense? You're not running calculations fast enough to take that risk. And that is a 16-point bar to close below the triggers. So one of the things I've been studying is a continuation style entry. When your small triggers roll down, let's see if we can get a stab back to the mid-band, because we're not fighting triggers that are down. Let's see if we can get some sort of reduction of risk, some sort of down bar right off that area with triggers down. I've been studying this one. I haven't shared it with you, John Novak. Continuation style entry on TradingView. So we're going to see what happens here. Like to see an up bar. Would like to see it try and fail, and with the down triggers, get in on a reversal bar here. So let's see if it sets up. Do you Renko bar users remember that continuation where if it's not perfect, right, when those small triggers roll and you get a snapback, a lot of times you can take advantage. So that was your snapback. You'd have to put your stop where the market shouldn't go. And that would be a continuation style entry. And that's why the pullbacks are great. Ideally, we wait for a close down. And here it comes. That was your snapback. We get in on the snapback. Now it starts to continue down. And if it finishes down, our stop is behind that reversal bar. for the continuation look to get down to our targets. Does that make sense, everybody? That's kind of a second chance entry. I'm in one contract. Let's add a contract so that we can take half off. Does everybody see the look? The triggers are already down, so there's absolutely no fight on the triggers. Snaps right back to the midband, finishes as a reversal bar. This is a second chance entry. And John, you had to get out because of areas and triggers. Cool. We're going to let this one play out. It's $135 worth of risk. It's one contract. Just learning entries, guys. That's all we're doing. We're just learning entries. Everything says down. Absolutely nowhere to go. Termination for the win. It went down. What is that? That's the NASDAQ. I don't know how I got short up there. Guys, glitch in the matrix. How's that for giving us a better entry? I don't know what happened there. I have no idea what happened there. Alright guys, I'm just going to get out of it because that area is holding and we're closing above it. That wasn't a lot of fun, I'm not going to lie. There's too many minds. Too many minds, too many options, too many things that could happen, guys. We're going to keep it simple. We're going to take one trade. We're going to take trend trades, or two trades. We're going to take momentum trades. But I'm going to take 3 minutes and go stretch my legs. Let's finish off. And I'm going to share something that I'm not proud of real quick. I got caught up in sibling rivalry. And I deviated from the plan. And that is my fault 100%, guys. John Novak has 30 years experience. John Novak has a different pain tolerance. You guys are brand new. And as brand new users, the easiest thing that you're ever going to be able to do is to keep it simple, to keep it focused, to be willing to stay out of the market. And I own it 100%. I broke the rules for the plan right in front of everyone in here. And I actually took losers for breaking the rules. So maybe a good lesson. Maybe a good lesson there. So I apologize if I confused anybody trying to keep up with John Novak. Ninja says no more shorts. TV is showing small chart triggers down. Oh wait, prices outside of outer band, which would mean shorts, right, Victor? It would mean nothing but shorts. So smalls are down. Strong side of the smalls. If you were going to take a short, there was your pullback to a zone. There was your red bar that closed below the triggers, below trouble, and so far it's still working. Does that make sense, Victor? Strong, smalls down. Let's make them easier to read. Smalls down, strong side of smalls, below trouble. The market pulled back, right to the zone, right to the outer band, gives a red bar close below. Does that fit a plan? Does that follow rules? It's so much easier when you don't try to think. That's okay. Timing is a big deal, guys. Timing is a big deal. Getting into the market at the right time is going to take practice. Getting into the market when the rules are met is going to take a little understanding and a little time. So what's our next trade? Smalls down, strong triggers. I can't just jump in at the base of a zone. I can't just jump into the market. I need some sort of pullback. I need it to be to a zone. Since the triggers are strong, 54 and 54 keeps us in a good spot. We'll see how it sets up. Ninja Trader is still dancing. There was your close below the triggers at the zone with everything down. And sure enough, it's working too. Guys, if you're smarter than me and you don't fight anything, you have room back to trouble. I made a mistake today. I'm not afraid to admit it. And sure enough, if you waited for the pullback, if you had room to trouble, guys, it's working beautifully. Working beautifully. How easy is it to get caught up in nonsense every now and then? And I did. I'm embarrassed. But that's okay. Doesn't mean I can't read my indicators. It means that I made a mistake. Triggers down. Strong side of triggers. Nothing in the way. Fresh start. Smalls are down. Large are down. I need some sort of pullback. I can catch a momentum trade. Means you're human. Yeah. I hate being human, Victor. Pisses me off when I'm in front of a live audience. But it's a part of trading, guys. There are times where you're going to get caught up, right? You're going to get caught up in the moment. I did. I got caught up in the moment. I got excited. Now we're hoping these areas create a bounce to get us in the short trade. I appreciate you guys. Thank you for the support on that. Nowhere to go on the S&P. What's crude doing? Pulled right back to the HVA with strong triggers, and that's where it bounced down. Damn. We've got a rule for that, don't we? The only time you use a limit order. Gold. up, already hit trouble, small triggers down, can't arbitrarily jump in, not from an area, over and over. Guys, what do you want to talk about? Large chart says nothing but shorts and nothing but room. Small chart says, hey, there's some trouble. Look at the bounce it's creating. Ninja Trader. Hey, Victor. This is pretty cool. You guys will like this. So this is crude oil that said no more shorts, right? David, you're going to love this one. Does everybody see that crude oil pulled back to resistance and the large triggers stayed a full bar away? And what does that suggest? A big push down. Closing the gap to the triggers. And when we get there, we'll have to make decisions at Fibonacci support. So TB, they are sometimes. Sometimes they are. Sometimes there's just no room, man. And that's a part of trading. But if we got to pull back to this mid-band in this zone, and we got to close below right around 17, I've got 9 points. I've got $180 per contract to get back to trouble. Does that make sense? A lot of times there's more room than you think, but it's got to be gauged from your entry point. My rule is on the NASDAQ, if I have $100 worth of space before I hit something solid, I'm willing to take that trade. I'll just take 100 off at that area, and then I'll manage the trade. Because even if I have $90 worth of risk on my trade after I hit the area, I still can't lose. It's those large chart areas. Those are the game stoppers. These create little bounces, little fluctuations. So if these small triggers roll and the market pushes up, we'll call our shot. We want to see it come back to somewhere up here. And then we'll get a close on the correct side of the triggers. And if we do, we'll be going short with triggers that are down from the strong side of triggers and nothing but room. Does that make sense, TB? So sometimes these areas are awesome. Yeah, it is being recorded. Absolutely, Sword. And did you get my answer privately there? Guys, when you purchase the Nexgen T3 indicators, you get them for both TradingView and NinjaTrader. Now, John Novak has introduced an automated trading system for NinjaTrader. That is not included with your indicator purchase. That is a completely separate product. Just so that you guys know that. And that'll be available for lease. I love it. If you struggle with entries, guys, it tells you when the perfect entry is. And then you can impart your management on it. We put a lot of time into that thing. Hopefully the end of the week, Morgan. So you should have gotten a message from your client advisor. It's 2 separate products, Victor. 2 separate products. So I guess if it's automated, that's a good question because you need the indicators to run it, right? So maybe it's only for next-gen users that already have indicators. Wow, that was a good one. So if somebody just showed up and wanted the automated system, how does that work? You don't think you got the email? Well, we've been holding off on you, Morgan. You don't participate like you used to. Who's your client advisor? Get with them. I'm sure they'll hook you up. You have someone that wants the automated system, but not the next-gen member yet. That's a good question. My guess is that you may need both because they are separate purchases. I'll let you know as soon as I get an answer, though. On the automated, George? No, sir. We've been testing it for 8 months. And if you know John Novak, he doesn't release until it's ready. We have hit every roadblock we could come into and found a way around it. And he'll be teaching, guys, if you got it, Friday at 1 p.m., he'll be teaching the discretionary side of it to help you get the most out of the system. Yeah, Jen, you can reach out to Jen. Thank you. Yeah, and it implodes, right? Oh, no, that's Apple. Is that Bill Gates? Is Apple Bill Gates? No, he's Microsoft, right? Where you buy it and then it implodes. It's 6 months and you have to buy all new stuff. Buggy software. So, guys, if you didn't get the email, reach out. There was a limited number of lifetime licenses, and then it goes into lease, is my understanding. But if you guys have ever met me, I'm not really the salesman. They keep me out of those conversations. I'm typically doing more good over here teaching you guys to read indicators. We've still called our shot. You guys see it? The box is still there. We're trading with small triggers from the strong side of small triggers. Still gives us room to trouble. We just need someone in the NASDAQ to push it up. Someone to get us back to our rules-based entry. Is everybody with me on that? We've been waiting since 11:30. It's 11:37. 7 whole minutes without a trade, ladies and gentlemen. That's tough. That's hard to survive. But I believe in all of you. And let's see if patterns repeat themselves. There's a white bar up. Let's see. Why does it need to get to that box? I guess technically we have pulled back to an area. If I get a close below the triggers, though, I've got like 3 points to get to this area. And since the small triggers turned up, TV, it's more likely to retrace up here. But if I get a close below and I've got $100 worth of profit, you could take that trade. But I didn't have any of that room yet. Not here. I just didn't have anywhere to go. And sure enough, here we come. That box is an area. And the trend trades come from areas and then closes on the correct side. Does that make sense? The large chart still says down, and the large chart still says strong side, and the large chart still has room. We're just trying to get a running start at these areas. Ideally, they pull up to like 55.20. I wait for a close on the correct side of the triggers, TB. When I get to that box, because my small triggers are up, my plan says, and not my opinions, not my thoughts, but my plan says, don't fight the small triggers, wait for a down bar on the correct side. Does that make sense? And look at that, there we are. So let's see what happens. I'd prefer that it doesn't happen right here and have me trading directly into this zone. I'd love to see it push up one more time. Because if I close right here, there's not a lot of room to trouble. I'm going to have to manage it a little more aggressively. I love room to targets. Still no close on the correct side, and as you can see, it's still going with the direction of the small triggers. You guys see that? This is where I hope. Please push up higher. Please go to the top of the zone. Please give me that close below right around 17, because that's going to give me room to run down with all of the greatness happening on the large chart. Is everybody with me on that? Our first sign of trouble is at 09. So in a perfect world, I want to be in no lower than 14, which means that this bar which didn't close inside, doesn't fit my rules yet. But what it did do is those small triggers are pushing up higher, which means that a close below can happen at a better spot. But I've got 49 seconds to do it. Take care, Morgan. And sometimes they're going to head fake you, right? We've got 33 seconds to wait. Does everybody have their timer turned on the minute bar? 25 seconds until the bar is finished. 20 seconds until the bar is finished. 16 seconds, 15 seconds. This is why, ladies and gentlemen, we don't try to anticipate the close. 9 seconds, 8 seconds, 6, 5, 2, 1. Rules not met. Not yet. And now I have to start all over for a minute. This is what we're going to do Thursday, guys. We're going to bore the hell out of ourselves waiting for rules to be met. Is this helpful for you guys? How to set the S&P? When you say mine is on, what do you mean, Andy? Oh, your timer? We've got 26 seconds. Click the little arrow here. Go to more settings. Scales and lines. Countdown to bar close. All right, I think this is going to be it. 10 seconds, 9 seconds, 8 seconds, 7, 6, 5, 4, 3, 2. This is so exciting. And I think we just got to close below. We'll take 2 off at the first sign of trouble because that makes sense. Stop where the market shouldn't go. How do we do, guys? Was it worth the wait? Let's see what happens. I don't know if it's going to be a winner or a loser. There's not that many things, Andy. What direction is the large trigger or the small triggers going? They're going down. What side of the small triggers am I on? The strong side. Do I have room to trouble? Hell yeah. Wait for a close on the correct side and accept whatever happens next. I don't trade 2 platforms. It's got a corner in. That one closed below, Victor. The timer, more settings, scales and lines, countdown to bar close. Victor, I clicked it on 1 and the corner was in. That one did close below though. Now we just want to see if it'll push down to our first target. If we're in at 1675, I only have to get to 1175 for $100. Did you get it, K Price? Andy, I do know them because I spent 5.5 years on NinjaTrader. And I am 7 months, 8 months into TradingView. I love that my small triggers are down. That makes me feel good. Doesn't guarantee a win, but at least they're heading the right direction. And I've got a giant zone above me, and I've got mid-band above me, and I've got small triggers down. And guys, I don't have a worry in the world. If they get me, they get me. If they don't, they don't. Right? I got $90. So my job is to just sit still and let the market do whatever it wants to do now. I took my entry. I put my stop above the pivot. Everything so far fits the rules. The only thing I won't be in control of is the result. And I know that's weird for a lot of people to think that way? How do you just sit there when it might lose? Because it might lose. That's a normal part of trading. And now you have to ask yourself, if this bar closes below the triggers, are the rules still met? And the answer is yes. And if I would have put my stop outside of the zone and not the pivot, we'd probably still be in this trade. Let's see what happens. Doing nothing? Doing nothing is hard, guys. Doing nothing is definitely the hardest part of trading. There's another close below triggers. I had $100 worth of risk before we hit something. Still doesn't guarantee a winner. But guys, all we're doing in this room is we're learning how to enter the market. We're learning how to wait for advantages. We're learning how to recognize when you have a close below, how you're going to mash it, where your stop's going to go, why you're taking that trade in the first place because of the advantage over on a large chart. And sometimes the market doesn't do what the market suggests it's going to do. And if you had any idea how difficult it is to take trades that may not win in front of a group of people that want everything to win, that don't want to see losers, that don't want to believe that their software purchase could ever produce a loser, it's a sample, guys. It's taken 100 trades that look exactly the same. It's recognizing patterns. And if you're on simulator, what could go wrong? Right? If you're on simulator, what could go wrong? You just made back everything that you lost in the first trade, and now you're break even, and you've got nothing but room, right? And if you wanted to, you could even say, well, you know what? If that doesn't break, this can be a $400 trade. Or you can say, I'm going to go break even and see if they want to continue with the large chart down to the VWAP. Does it make sense, guys? Fit the rules, whipped our ass, fit the rules, paid us. I love this stuff. Following a plan, guys. Following a plan is freaking amazing. It takes all the emotion out. And you have no idea how difficult it is to take a loser in front of a group of people evaluating software. We have already fixed every loss that we took on that trade, guys. And if you wanted to, you could say, you know what? If they get to the next trouble area, I'll get paid again on the way down. My job is to get paid, guys. My job is to get paid. My job is to wait for the best of the best, to wait for the pullback with the down triggers to get in on the close of the small triggers and make money. Beautiful job, Victor. Beautiful job. 8 ticks. It randomly closes. Any ideas? But it randomly entered you there. You sold here as a test. You are on delayed data. 8 ticks. Your data is delayed. You are 10 seconds behind. We're still in, guys. And now we have strong triggers in HVA in a zone. If they get above this area, they're probably pulling back higher. Let's protect ourselves. Did you pay for data, 8 ticks? It's like 70 bucks. Not 70, excuse me, 7. Paying for data is like $7. So if you're not in the funding evaluation, you have to have data to move it. Yeah, it definitely will. So I'm using my data right now. Guys, we're still in it from the correct entry, strong triggers, hiding behind the zone. We have one more target at the next sign of trouble. If they hit it, our next target is the VWAP down at the bottom. Does that make sense, everybody? There we go. Second round of targets hit. I've got one contract left. I'm up $255. I'm behind everything that could create a bounce, and I've got room to my target. Do I re-enter? No, I'm still live one. We went short 4 contracts. We've taken 3 off so far, TV. And now with strong triggers, we're pulling back to an HVA. We're pulling back to 1-1s. We're pulling back to a zone. And if they make it above that, guess what? I'm out for $85 on my last contract. There we go. Trade's over. I did. I re-entered when it closed below the small triggers from the zone with the advantages. So TB, what this was, I'll show you exactly what happened. Every rule was met when we take the first entry. And I put my stop, TB, 2 ticks above the pivot that gets me in. That's my rules. Well, they decided to stop me out. It's going to happen. Everybody write it on a piece of paper. You're going to get stopped out every now and then. And then look what happens after. The market closes below the small triggers. With all of the same advantages, we just had to go twice. And getting in the second time, we got paid at trouble. We protected our investment. We got paid at the next set of trouble, continually protecting our investment. And we did get stopped out of this trade behind the area that should have stopped the market, and it didn't. Pretty cool, right? And that's everything that's in the KISS plan that I gave you guys. So this one didn't work. It was a loser. No, so what happened is, here, let me show you. We'll do it this way so there's not any moving bars. Took my entry. Hold on, where was it? Took my entry. And then, you do understand? Right on. This will be for the people that aren't sure. So it was 4 contracts in, 2 contracts off at trouble, a 3rd contract off at trouble, and then stopped out where the market shouldn't go. So I never added to my position. I just started with 4. It's all right. Sometimes even when you understand, yeah, I'll explain it anyway in case somebody doesn't. So guys, if you have a question about it, let me know. The most important lesson here, I think, is that you will take losers. It happens. Figure out how to take fewer losers. Paul? Close below. And you got out, I don't know, 16? So you were, so you took the first one that stopped us out, Paul, right? Do you see how the rules were still met with the close below? So that would have been your re-entry. Would have been your re-entry. I had to take it twice as well. Jen, perfect. You kept it above the zone. You did that better than I did, Jen. And you got paid. And it looks like you got short again. And then you got paid again. Added 1 by error. Right on. Great trade. It's the exact same look, right? And Jen, you kept it behind the zone, not the pivot. I actually like your management better. But mine says on a trend trade, go a couple ticks behind the highest pivot, right? Jen was willing to add an extra $50 of risk on her trade to have the zone to protect her. She didn't have to take it twice. Absolutely beautiful. And how did you get out at 06? Did you put your stop at an HVA with strong triggers? So Paul, to separate targets, I'll show you. You had it behind the zone? Bring that back up. Did I miss it? 06 is below the zone. You had to get out? No worries. Sometimes you got a potty. All right, Paul, let's do it. So if I enter the market, 4 contracts, and I have to wait for a close below the small triggers to do it, you took profit as you can't take on trade more than 50% of profit. Okay. Consistency rules. I like it. I need the market to pick a direction real quick, Paul, for the lesson. So if we get a close below small triggers, transition down, but these are up, no just jumping in. And guys, we're right into a zone. But Paul, for the lesson, if I enter 4, I'm not even going to put a stop loss on there. And I have my target down here. To do partials, I need to change my quantity to half of them. And then down here, since it's a sell, I'll put buy 2. And if it hits it, it'll take 2 contracts off. Leave me with 2 contracts, and then I'm good to go. Guys, that was a rules-based trade again, wasn't it? You want to see if they want to make the VWAP this time? We'll just go break even into the HVA, and it gets us. Did that make sense, Paul? Enter, have your target in place, and then cut your contracts in half. So if you buy, you'll sell, and if you sell, you'll buy, and that'll pull off a portion of your contracts. Awesome. So practice that on simulator, guys. Practice that on simulator. But what we're going to do, look at that. They're still closing the gap down to those triggers. How cool is that? And then they start dancing. It will take a little bit of practice. And they're still above every fib. And the large triggers are a full bar away. That's a good sign. So guys, on Thursday, what we're going to do is exactly what we did here. 100% adherence to the most basic plan that I know how to give you guys. There's going to be a lot of waiting. There's going to be taking profits at trouble. There's going to be closes on the correct side of the triggers, and there will be losses. But there should be more winners than losses if it's working. It's been consolidated for a while on crude, hasn't it, Derek? It's just stuck, right? What a great time to go make a sandwich. All right, Victor, rookie question. If I'm on a sell trade and want to place my second profit target, you have to place a buy trade with only 1 contract. Yes, so if you're short 2, let's just do it this way. I'm going to take, let's see if I can find one that's at least going down. Not a real trade, guys. Not a real trade. So, Victor, if I am short 2, I'm going to put my stop loss way out of the way so that we can do this. I'm going to take my profit target to my furthest target, to wherever I think the large chart is most likely to go. Does that make sense? And then I'm going to put my contract count down to 1. And with the contract count down to 1, I'm going to right click that little arrow. And the opposite of sell is buy. So I'm going to put a buy limit right here. Now if it hits my buy limit, it'll drop me down to 1 contract to try to go to the distance. Does that make sense, Victor? And guys, while we were managing out of that short trade, the system caught a long. And it's out 3 out of 4 contracts and now has a runner. You do have to be in the trade to do this, Paul. Well, look at that, Victor. It hit our first target because everything's set down, right? Let's get our executions on there so you can see them. It hit our first target. It dropped us to 1 contract. And now we still have a second contract down here. We fudged the entry, guys. We broke the rules on the entry. But here, with 1 contract remaining, go break even, right? Put a couple ticks on it. See if they make it to the next trade or to the next area. But that's exactly how you'll do it. If you enter 2, you'll exit 1 with a limit order. Let the furthest one be the one that you use your profit target for. Let that be the one that you slide off of the entry. I just always think equal and opposite reactions, right? So if you buy, you have to sell to get out. If you sell, you have to buy to get out. All right, guys.